Mm. All right. All right. Good morning and good evening, and welcome back to the live analysis session. It's Wednesday, April 22nd, 2026, and this is your host, Harsh, again. Let's get started. Just a small change we've had. Instead of daily live sessions, we'll be doing Monday, Wednesday, and Friday, 3 days a week. The intention is to introduce some other aspects in the remaining 2 days, that is Tuesday and Thursday. So we'll have live sessions Monday, Wednesdays, and Fridays, and probably educational or on-demand analysis on Tuesdays and Thursdays. That's what is the plan. So, anyways, it's not going to affect the live sessions. Three times a week we'll be meeting, so it won't should not be a problem at all. Let's get started off with the goal as usual. This is the 4 hour chart flashing up on your screens. Now, I think Monday we were discussing about gold declining towards this potential green zone rectangle here, uh, starting 45 80 or 45.90 levels. Okay, price action has declined almost 100 points plus. Overnight lows were print around 46.80 if I'm correct. And let me remove this orange line. We are still not contemplating short positions aggressively. That would become too aggressive, keeping that potential five-way move has been made uh, on the higher side. So the trend could be, or trend might have already changed to an uptrend. We are more optimistic on the bullish sentiment on gold than the decline, though we are keeping a close watch, but it needs to break quite a few levels to confirm and declare that it's going to new lows actually. Potential does remain for gold to really go and print below that 4100 or 4000 mark, but uh, the probabilities are less and odds are in favor of bulls right now. So buying on dips is recommended. Probably we are still waiting for price action to enter this green zone before we start committing on the long side, and it remains to be seen how soon or how quickly it's going to happen. Now, looking at the wave structure here, let me flip the chart to an hourly. It has done now it could be an ABC complete, all right, or if it is a if it's a trend reversal, then it might go much deeper. But at least it looks like a three-wave decline, which might be complete right now, because the Fibonacci extensions are pointing towards one more low actually. They are 46.78. It is print 46.80, and the next one could be 46.42. So that could be the next stop. But you know what? It's not necessary that it goes to the 61.8 or 0.618. Actually, it might have completed because it looks like a three-wave decline already. Short term short-term outlook, if this is the boundary which is being worked upon, then support is coming somewhere around 4720, 4700 zone. I'm talking about this boundary, sir. So small long positions could be initiated on a retracement or on a pullback of this boundary. Prices are just managing to drop. Maybe we can flip the chart to 15 minutes for a while, and there you are. If I do a Fibonacci retracement here, then there you are. The 38.2% has been tested. It could drop towards the 61.8% as well, around 47.10 before it begins to cut loose on the north side again. Another option is this corrective drop could be the first wave within the three-wave corrective drop. Okay, so this could be wave A. Now we are looking for wave B somewhere higher. So let's take a Fibonacci retracement of the entire drop. The 61.8% is coming around 4805. So watch out for support coming in around 4720, 4710 zone, and then prices rally towards 4800, which could be wave B handle. Let me explain. Let's understand it on a higher time frame. Sorry. There you are. So what we are trying to say is if this entire boundary needs to be retraced, it at least needs to do a decent corrective drop or somewhere around the 50% or you know just around that wave 4 mark. I would say at least 38.2%. So if that is wave A, then we are now looking for a potential wave B higher. Maybe from the 4700 zone it may rally towards the 4800 zone and then drop uh, towards the 50% retracement. Now this neatly completes the counter trend uh, or a potential higher degree wave 2 or wave 2 of one higher degree. Let me see if the extensions are matching retracements. You see there is one match around 38.2%, which is around 45.80. That's a very nice zone. We would like to commit ourselves on the long side around that zone. So 38.2% and maybe 50% as well. All right. So at the moment we will be looking for just look out for a corrective wave or push through the 4800 zone. I think it should find resistance around the 4800 zone and then reverse sharply towards 45. Let me bring this to 45.80 at least. Now that makes a lot of sense. It completes the corrective decline and then maybe the bulls might be more inclined to fetch it higher from there. Alright, so that's the story for now. In gold, and we'll be coming back on Friday to discuss further. Uh, just a quick view on Euro has been quite silent, and we we would still want to give it some more time before more clarity is received. It is quite possible that I think we discussed on Monday this entire drop from 1.2 towards 1.14 could be wave A, that could be wave B. It is three waves right now, and wave C maybe printing or maybe dropping below 1.14. That's quite possible. We're not saying it's going to happen, but it is quite possible. All right. On the other hand, if wave 2 is ready, minor degree wave 2 is print around 1.14, then we are quite into the bullish territory already, where we've got wave 1, wave 2, and wave 3 progressing higher. We'll find out because if wave 3 is already progressing higher, then I think we might see one more high. Let me see if it's the 38.2% or 38.2% touch already. It could be wave 4 here. So 1, 2, 3, 4, and maybe one more high, wave 5. That is still wave 3 complete. So we'll have to just wait and watch. But it's not a bad level to come into bit long side. I mean, if you are a bit aggressive kind of a trader, you might want to initiate some long positions here. And the stop loss would be just around that wave 1 high, around 1.16. Potential aggressive somewhere around 1.170030 mark, and the stop loss, because we don't want to risk more than 150 points, right? So that would be wave 1. The territory of wave 1 potential targets could be that particular resistance. We'll also find out the Fibonacci level, but roughly it should be going around 1.192030 mark. All right, this could be for the euro aggressive bulls. Once again, these are educational sessions, so kindly use these information accordingly. It's not any kind of suggestion or to pick up trading or speculation as it's not a signal thing that we are discussing. It's just a way of theory and educational basis here. All right, so it should not be construed as any form of financial advice or trading encouragement, please. Having said that, if we try and find out potential targets for pointing towards 1970 up there, so that could be wave if it is seriously unfolding wave 3 and wanting to extend further, then this would keep rallying. All right, even if you look at the RSI, it is somewhere around bottoming around the 40 mark. So you know what, it means there could be one more high possible, and the RSI also showing bearish divergence. That would be a very nice indication that we might be completing the fifth wave and prices might be reversing lower again. So keep an eye on that, please. But it's a 200 points potential rally against 100 points of risk, less than 100 points of risk, I think 130 to be precise. Okay. All right, so let's have these two discussions for the day. We'll be back on Friday to touch base with once again gold, euro, USD, and also the Dow Jones. All right, once again, thank you for your time being here. And if you're liking what you're seeing, you might want to be subscribed and also help spreading word. This is for traders and by the traders. Until the next one, good luck to your trades and please do take care and God bless. Goodbye.